Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Now guys, let's update our view on the gold market. You can see that upside performance here has happened as well after the CPI report, but it was much weaker than on the euro currency. So the enthusiasm here was not as strong as in the forex market in relation to the inflation data. And although overall situation on intraday charts slightly improved, I mean in terms of the bullish context, it is still not enough. At least I wouldn't say that it's perfect and ready for position taking. Although some half decisions we could make, maybe consider taking the minor part of the position with the hoping that later the situation will change in favor of the bulls. So what the particular risks we have for the current environment? First of all, on the daily chart, you can see that market is flirting with the MACD line and potentially it might be the bearish grabber. So I will show you with the MACD. Here, as you can see, testing it. And if market will close below this area, that potentially could mean appearing of the bearish pattern. It brings no really big hazard to the overall bullish context, but for example, it could trigger kind of the A, B, C, D downside action. So a bit deep retracement might happen if grabber will be formed. This is at least theoretically what could happen, why this brings some risk. On the lower time frames, on the 4 time frame chart, you could see that we've got the bounce here, but it hasn't reached the potential neckline as we suggested. And currently it's early to speak about the forming of some bullish reversal pattern, bullish continuation pattern in our situation. So just compare this performance with the euro. If on the euro currency market stands almost at the OP target around this level, on the gold market it hasn't even exceeded the previous stop that we have on the 4 time frame chart. So here's performance much weaker compared to the euro. At the same time, we can't say that it's absolutely bearish, because on this retracement market was able to stay outside of this consolidation, holds both trend lines, stands outside of the confluence. So it's also neither strong bearish context. In the current circumstances, what we could do, if you're a conservative trader, I would wait for clear bullish signs or the crush of the short-term bullish context. For example, if still we get this downside ABCD based on the grabber, so you could do nothing today, wait what we'll see by the close of the session. If indeed you will have the bearish grabber, then you will be right, and indeed you should do nothing, wait for this grabber will work out. In this case, indeed, we could get this downside ABCD, and we could get much better entry opportunity around 3270 area that we already talked about. If conversely market will turn up and grabber will not be formed, you could start keep watching for possible bullish continuation pattern, which might be the hand and shoulders. So that's the conservative approach. If you still prefer to act a bit in advance and you probably, well, you have some reasons to suggest that here's might be the bullish continuation market who should start upward direction, you could keep an eye on the hourly chart. What particularly could be done here? So you could see that with this performance market breaking above the neckline, breaking the 3360 resistance area, but now actually guys, I would like to offer you to consider taking the position with this support area right now, just because to follow some harmony, you can see here might be minor retracement of the same depth as here, hence maybe 3340 area might be interesting for position taking. In fact, normally bullish market should not erase the small stress and upward action. So that's why you do not need to consider any deep standing fib levels. You could stay focused just on this area. Consider taking the position around the support areas, because if we have indeed the upward continuation here and it's starting action to the OP, We should not get broken it down, and market should not actually erase the most recent upward action, this rally. So in fact, that kind of the, well, an 80% invalidation point for a current scenario. So market should not drop below it. If you'll see the drop 3320 area, with a high degree of uncertainty, we have the drop below this area, and we will get this downside ABCD that we're talking about. That's why if you still would like to take a long position, particularly today, that's the levels that you could keep an eye on, and that's an area where you probably should hide your stop. This actually only think that it might be considered for now. Maybe on this just collapse that you see right now on the charts, maybe it makes sense to wait and see what will happen, wait and beat when the market will come down slightly, see what reaction will be on the 3340, for instance, drop your time frame to the 5-minute chart, see what the performance you will get around it. Maybe some bullish patterns start forming here. That could let you to resolve the current riddle, whether it makes sense to enter in long position, where it makes sense to enter. So that in towards what you could do if you'd like to anticipate overall, anticipate the moment when the final bullish context will be formed, or actually it will be destroyed. So that in towards what we have. That's been said as a bottom line. If you are not sure, just sit in the hands and wait and see what will happen. Wait for a daily grabber, wait for reverse hand and shoulders on a daily chart, or downside ABCD depending on the grabber. If you still would like to take the active position, watch for these fib levels that we're now watching. Drop your time frame, watch for how market will react on these levels, whether some bullish patterns will be formed, and if you will get it, hand and shoulders, butterfly, or anything, you could try accurately to take small parts of your position. Do not take the whole lot in trading on the gold market. Take the 25, 30, 35% maybe of your position and see what will happen. If you will be right, you will get here a kind of the harmonic reversal pattern. As market keep going higher, then you will take the rest of your position later. If not, the market start dropping, you will out, but with a reasonable stop. That's into what we have.